All right, hey everybody, this is John. Welcome to the free video. And kind of the markets here are kind of chopping back and forth today after hours. Intel released earnings. They closed at 59. The problem right now companies are having is that they're meeting expectations, but they're not providing any forward guidance. And Wall Street hates that. So it's down after hours. It's down about the expected move. The question is, though, is this going to start having an impact on the indexes, which have obviously enjoyed a very frothy rally off the lows? And the problem with no guidance is that it's exactly what it says. Wall Street can't sit there and say, well, when they say no guidance, does it just mean that you're not really sure how good you're going to do, or are things so ugly you don't want to tell us? And in that environment, they generally sell the stock. So the Nasdaq today, this is a 78-minute chart, uh, was at one point trading as high as almost 8,800, not quite there. So it's come off nearly 200 points since today's afternoon highs to where we are here after hours. And so the question is where does that leave us? Where does that leave the markets for Friday and for Monday? So for me, this is kind of the most important chart that's out there right now. This is the S&Ps. I've talked about this before. You got the trend line from the lows on March 22nd, 23rd to where we are now. We've kind of broken those, and now we're just walking along, pulling back, walking along, and pulling back. If we can close back up above this, especially on a weekly basis, then I'm looking for a new high here. I'm not looking for us to take this out, but just maybe we actually go to the 618. But the longer we're below this, we had this 4-hour squeeze fired short. This is the one that drove us there. And now there's another one forming. So to me, it actually makes the most sense that we're actually, due for a pullback here. So I like the idea of buying puts on spiders, buying puts on the Qs. Yes, of course, there's going to be stocks like Amazon in this environment that they're doing great, but the indexes are showing signs of fatigue. Now, what I don't know in this situation is that this is a classic technical setup. Okay, we've got all kinds of things here that are gunning for lower prices, including combined indexed equity put call ratio that's back with a spitting distance of bearish levels. Okay, if you're not familiar with this, this basically just means when it's here, everybody's buying calls, no one else is left to buy, you generally pull back. In this case, we pulled back pretty hard. When you get in this zone, it means everybody's short, no one else is left to sell, and then you bounce until, guess what, you come back to 0.80, and that's where we are. So I mean, I have to have short exposure in this market, and just the question at this point is where can it go to? So for the downside, for me, especially because the Nasdaq is tech heavy, and there's certainly some good stocks like on Amazon, they're doing great. I am looking to see if we can actually get back to this fire line right here, which is 2665. Okay, that's a modest decline from where we are right now. And then if things get hot and heavy, that we could get back to 2500. So where would I know that I was wrong with that? Simple. We actually just take out this little high right here. So that's what I'm looking at in this market. I don't, I like to be long stocks that are bullish. Okay, so Zoom and Amazon, great. They're normal bullish stocks. Buy the pullback. But on the indexes, I am short. All right, that's what we got. You have a good one, and we'll see you at the next update.